Hello and welcome to Africa Business Weekly. I'm Akin Obakeye, and I'll bring you the latest development shaping Africa's business landscape over the next half hour. Now let's get a sense of what to expect on the show today. It's a new era in Botswana's equities market as the new pension fund regulation is becoming a game changer. And then we look at revenue mobilization in East Africa and how organizations are moving to address financing gap. We focus on political developments in Cameroon as the country's election draws closer. All these and more we'll be discussing on the show today, but Karabo is on standby to give us updates from Southern Africa.
Hello, Akin. Well, the Botswana Stock Exchange recorded its highest ever trading volumes in the first half of 2025, and this growth has been fueled by new pension fund regulations boosting local asset allocations, alongside rising ETF activity and increased retail investor participation. To unpack the current state of the BSE and its outlook amid ongoing market volatility and global tariff uncertainty, CNBC Africa's Fifi Peter spoke to Opa Munyatsi, CEO of the Botswana Stock Exchange.
It's a 96% year-on-year growth on market turnover on the Botswana Stock Exchange. That's phenomenal, and it's predominantly driven by, as you said, the pension fund reforms, where we saw a lot of offshore funding coming onshore and being allocated to asset managers locally. But we've also seen a huge appetite for our ETFs, the gold ETF and other ETFs surging up 80% year on year. An increase in retail participation as they start to look for alternatives from your typical money market investments. So yeah, all these trends helped both the first H1 of 2025 for the Botswana Stock Exchange. We believe we will continue to see, albeit very cautiously, a continued increased turnover in the second half, as we also start to get potentially some new listings in the second half of the year. So yeah, exciting times, but very concerning times in the macros.
Yeah, probably a really good time to come to market as a company in terms of pricing when things are looking up. But given the fact that you have touched on new listings, maybe you can just give us a teaser to the extent that you are able to talk to us about what is in the pipeline and how much potentially is in the pipeline for your bourse.
Yeah, we have some very exciting assets coming up. We have a bank coming up. Hopefully, we have a reinsurance company, and we have several mid-caps in the logistics sector and in the civil engineering and construction sector coming up. I think these are quite chunky deals, especially as you can imagine, reinsurance and banks typically are highly capitalized entities, so that will be quite exciting. And quite exciting that some of them are also regional players. So they give you a very well-diversified exposure from an asset class point of view. So quite exciting times.
Indeed, and I think it is also important to know that I believe that the Botswana Stock Exchange is the third largest on the African continent, but you can correct me there so if I'm wrong. But the companies that you have listed in terms of sectors, I mean banks, logistics, insurance and the like, all non-mining. And I suppose that's where the growth is right now. But if we look at what is happening in the mining sector, I mean, just reflecting here on the Johannesburg Stock Exchange, we've seen restructuring and consolidation of mining players and bundlings and some falling away. So let's talk about delistings specifically and how the mining sector is holding up in light of what is going on with your diamond industry right now.
Our biggest exposure that is very much in the diamond sector currently is the Anglo, which is dually listed, secondarily listed here on the stock exchange. Other mining names here in different away from diamonds, except obviously Lucara, which is quoted here again on a secondary basis, but they're doing well. They are able to get top stones there. We are seeing their auctions not as good as a few years ago, but they are still getting good liquidity, so there's no risk there. We have some in the copper type of business, coal, and that's again resurgent and doing quite well away from diamonds. We are not too concerned about potential delisting from a mining sector point of view at this point. What we are rather seeing is some mining houses actually coming to market to raise capital, to recapitalize and stay afloat during these uncertain times. So I think that's what we're seeing there. But non-diamond mining has been doing relatively okay.
In other news, US President Donald Trump's sweeping new tariffs on more than 90 countries around the world came into effect on Thursday. Financial markets are bracing for impact, or worse, ignoring the warning signs. In a discussion with CNBC Africa, PPS Investments' Reza Hendrikse unpacks the full implications of this high-stakes moment. And here's what he had to say.
In all year long, markets have been terrified, just taking in the various news flow sort of in its stride. And so for us, I think, what does it mean for South Africa? The US is certainly a significant market for us. 8% of our exports go to the US. And so a lot of that will need to find a home elsewhere. I think if these tariffs do stay in place, because certain of our goods will certainly become quite uncompetitive. I do think, though, that the tariffs are more of a negotiating tool. It's more to get leverage, and it's to encourage other countries to buy more US goods, to invest in the US. But as you mentioned, certainly, I mean, markets have really just taken it in its stride, with our market up 20% or so year to date.
But Reza, I would argue that we've been negotiating since April. I mean, when we first got tariffied. And despite, in my view, all of the talks that have been happening behind the scenes, and I'm sure continue happening, I mean, despite what some would call the bomb squad being sent to try and help things over there in the White House, we still got hit by a 30% tariff. So I'm asking, what happens if this is the new normal? I mean, according to what the markets are doing right now, it might not be too bad. But with that said, I mean, what could the new normal potentially mean for hard-hit sectors like those that are in the agricultural sector or even in the automotive sector listed on the JSE in terms of future earnings?
That's right, Fifi. So the market and the economy, those are two different things, especially in South Africa. But I suppose, firstly, for the economy, it certainly is going to be a negative. Some have forecast that these tariffs are going to have sort of a 0.5% to a 0.7% impact on economic growth. And that'll impact employment. We know unemployment in South Africa is already quite high. So losing another 50 to 100,000 jobs is definitely going to impact the economy, which then will have an indirect impact on certain SA-facing companies like your retailers, like your banks. I mean, other sectors that will be impacted, as you've mentioned, are certainly automotive, the automotive sector, and there the tariffs are quite steep. And that would make our market quite uncompetitive. We know that the vehicle market globally is quite competitive, and so certainly I think that's where a lot of job losses could be seen. Not only in automotives, it could be seen in agriculture as well, whether it's citrus, whether it's in the apple growing sector as well. So I think one has it's quite a complex set of issues that we have, and one must really try and untangle that. But I think taking a step back and firstly just understanding that the performance of our equity market is different from our economy, I think that's one important thing to bear in mind. And then the second thing is, so if we are going to see quite a significant impact on growth, what then can be done about it? I mean, certainly the government can step in and not only intervene, but certainly support those parts of the economy that are hit more hard than others. We are seeing an environment where sort of rates are coming down, and so perhaps that does provide consumers at least with some relief and does help to offset some of that negative impact of the tariffs on GDP growth. And those are potentially some of the silver linings that one can point to. We also, Yes, I mentioned the point that our market is certainly up, and that's also helpful for investors, I think, in South Africa.
Those were some of the major stories from the southern tip of the continent. Until next week, it's back to you, Akin.
Quite insightful. Many thanks there, Karabo. Tabitha, can you also bring us up to speed with stories from your region?
Good evening, Akin, and to our viewers. Africa faces a major financing gap to meet its sustainable development goals, calling for stronger domestic revenue mobilization. ATAF's RADA initiative has already delivered billions in extra tax revenue by focusing on digital infrastructure, agile support skills, and inclusive governance, pushing for fiscal independence by 2030. I spoke to ATAF Executive Secretary Mary Baine for more.
RADA is really Africa's contribution to that call for action for development through revenue mobilization by the African countries. And maybe to respond to your question in terms of how this is going to influence treasuries, we need to look first at what ATAF has been able to do in the last 16 years, and we have been able to provide support that has enabled countries to collect about 2.2 billion. Now, under RADA, we are looking towards improving that. We are looking towards increasing that because we understand the terrain better, but we are also working collectively together to improve both policy and administration. And so in real terms, we hope to double that. We are looking at Tabitha, a projection, a target of 2 to 3 billion US dollars in the next 2 to 3 years. And then collectively, we're looking at about 10 billion until 2030. So it is a way for Africa to say that we want to be in charge of development through domestic revenue mobilization. Thank you.
Indeed, and looking at those numbers, Mary, there, I am keen on the 194 billion US dollars in terms of the annual SDG financing gap that you are seeing here. So how much of that gap is or can realistically be closed through stronger domestic revenue mobilization?
A significant gap can be closed in terms of the funding for the Sustainable Development Goals. And this can be done through, if you look at the pillars of RADA, they speak to key areas of focus, especially in domestic revenue mobilization, the first being digitalization. So a lot can be achieved through digitalization because it does not only bring efficiency gains, but it also brings a lot of certainty. It also reduces a lot of time taken, both for the taxpayer and for the tax administration, meaning that it brings about service delivery, which increases a lot of tax compliance. So when you look at all those efficiency gains, when you look at the policy direction, because another pillar that RADA has is capacity enhancement, where we will be going into different countries and we will be working together with them to increase capacity that is sustainable for those people to continue collecting revenue effectively. But what is critical is also the third pillar, which is looking at how Africa can participate in global frameworks to ensure that we get proper taxing rights. And then finally, ensuring that legislation, tax treaty networks are properly put in place so that we do not lose more revenue. But what is critical and what will make this work, Tabitha, is not just taxes. It is also critical to see how these taxes are used for the public good.
Kenya and Tanzania remain at odds a week after President Samia Suluhu banned foreigners from running small businesses, a policy shift that could reshape cross-border trade. CNBC Africa's Abiegena spoke to KEPSA chairman Jaswinda Bedi on what's at stake.
This is a part of an ongoing presidential roundtable that the private sector, KEPSA, has with the president. The last roundtable we had was in December last year. So this is the fifth presidential roundtable that we've had with him, and he's committed to do these twice a year, and the next one will be in December. What we've also agreed is that we will now have ministerial roundtables in between, so every 3 months, so that we have less issues to escalate to His Excellency the President, and it's only main policy issues that we will be discussing twice a year. So it was very good. We had 57 issues in progress. We had 19 issues that we had concluded from the last time, and we have 4 issues that are weightier and that are policy issues that require presidential resolution. So if you look at 100% of the issues, we we've actually concluded 25% and 70% in progress, which yesterday they were given the all direction. And hopefully by the time we go back to the next meeting in December, we would have concluded these issues.
Quite ambitious indeed. And Jaswinda, I was listening to you at the forum, and one of the sticky issues that you raised was in regards to the latest offensive by our neighbor, that is Tanzania, which banned foreigners from conducting 15 business activities. And this clearly goes in contravention of the Common Market Protocol.
Well, Abby, you've actually answered it for me. The Common Market Protocol is very clear. It talks about goods and services. It talks about free movement of people, labor across East Africa. As you know, the family is growing now, and we have 8 member states, $310 billion economies together, all of us, and 330 million people. So with that type of demographic size, our founder members being Kenya, Uganda, Tanzania in 1999, really need to lead by example, and we need to make sure that we make this growing family a happy family. What I also said yesterday is that the growing stay of applications of the individual countries, and that actually bars them from selling into member states because you're contravening with a common external tariff. So what really happens is that once you start getting stay of applications, you're actually diminishing your market size by not, because you can't sell into the region. So those are issues that I talked about. We have a Uganda list, we have a Kenya list, we have a Tanzania list. And I think we have the East African Trade and Investment Summit in Nairobi in October, and one of those things that we want to iron out, and I did mention it to His Excellency the President, who's the chair of the East African Community, that we really need to make sure that within the region, the common external tariff is respected so that value chains can grow and trade does not get distorted.
To the business community listening to you right now, their biggest worry is what will happen to their businesses, because they have been given a timeline that they need to vacate or they will be facing the harsh laws.
But you see, it's not only applicable to Kenyan businesses, it's really applicable to the rest of East Africa and also the rest of the world. So those sectors that were picked up by Her Excellency President Suluhu, that should not be entertained by, and it is very cleverly drafted, is the Tanzania Citizens Act. So we really need to go into that act, and obviously the act will be 100%, Tanzanian citizens only. So it's just that Kenya as a country, we picked it up, and we are the first country who's actually saying that, guys, are we not contravening the protocol, the East African Community Protocol, which actually does allow this, and what should we do this? Because I don't think we want to have a retaliation reaction, but what we want to do is highlight it in this early stage, and through dialogue and through discussion, we can actually resolve this issue. Because I think a standoff will not be a good thing, and it's not a retaliatory measure that we want to have, but we want to have a dialogue, so that an early dialogue, so that we can make sure that this doesn't take effect.
From tax reforms boosting fiscal independence to trade tensions in East Africa, the continent's economic story keeps unfolding. That's it from the region. Back to you again.
Quite a lineup of stories there now. And then, in other developments, Cameroon's Constitutional Council has upheld the decision to reject the candidacy of Maurice Kamto, the main rival to President Paul Biya, in a presidential election scheduled to hold on the 12th of October. Now, the council notes that Mr. Kamto was barred because he was running under the banner of the Mandem Party, which also supported its second candidate, George Argent, political strategist at Argent Associate. Joined us earlier now for this discussion and build up to the forthcoming presidential election. Take a listen.
What surprises me is that a 92-year-old man who rarely appears in public is clearly not running the show all by himself. And he's got children. He's got his son Frank, who was talked about as a successor. When someone is in a position like that, it's the entourage that's really running the show. So the question is, who are those people loyal to, and what are their interests where they keep propping up Paul Biya as the president, and why have they not passed on power to the son or to themselves, or found another way to move forward? So I think those are the palace intrigue is really what's at stake here.
And talking about what's at stake at this moment, we also have to look at the credibility of the electoral umpire. Do you think that there are big concerns here looking at the overall electoral process at this moment?
I don't think in a country like Cameroon, where you've had one person in power since 1982, that we can even have a serious discussion about the credibility of the electoral umpire. Even in a country like Nigeria, which we've discussed on this program many times, and how impartial as an observer, that's light years away from a situation like Cameroon, where you haven't really had proper free elections. You've had one person stay in power for decades and decades, going now for an 8th term. This is on a whole other level.
And for you now, when we are looking at likely case scenarios at this moment now, do you think there's any chance towards the big question, democratic principles at the end of the day? Yes, there are elections being held, but are these truly democratic principles being upheld at this moment? Do you think the west of the continent can continue to hold on to the ideals of democracy?
Well, you know, we talked about this earlier with the Sahel countries and the coups that are happening. Gabon is a neighbor to Cameroon. You have a secessionist movement in the Anglophone portions of the country. And so all of those things are at play, and they're not at play necessarily through democratic means. Also remember, Cameroon is in a tricky position geopolitically. It is, as I said, a divided country between Francophone and Anglophone regions, but its currency is part of the CFA, which is backed by France. Russia is very interested in the Central African region, having strong links in Republic of Congo on the borders, in Central African Republic, which is also soon going to elections, and Russia has a strong influence there. And then you've got, of course, the issue of Boko Haram and the border of Nigeria in the northern part of the country, and the U.S. is keenly interested in that. So the question is, again, are the real power brokers of the country, who are the gray eminences behind Paul Biya, how are they jockeying between all those influences? The U.S. interest in counterterrorism, Russian influence in the region, and of course France's economic interests through the currency.
Yes. And now, when you're still looking at the elections, the forthcoming elections from Cameroon at this moment, we have about 80 candidates vying for the presidential seat. And the question is whether or not, if we don't have Cam to vie as well, how strong are these opposition? And in terms of the sort of unrest we might likely have, because when you take a look at Monday's pictures as well, some of the protesters are still in detention at this moment. How do you see the build-up, even the picture getting clearer when we're looking at whether or not we would have a smooth election come October?
I don't expect any of those 80 candidates that you mentioned to pose a significant challenge to Paul Biya. Again, they've been doing this since 1982. They excluded Kamto, who ran previously, and he was probably the biggest threat. So by getting him out of the way, they've pretty much cleared the field for a 92-year-old man to gain an 8th term in power. And there will be the discussion of, should we boycott, should we not boycott? Now, what I would, as a political strategist who works in these environments, what I would have advised those people to do is raise some money and bring your case against Biya to the international stage in the form of media, in the form of lobbying in foreign capitals, and maybe there will be some concession made. But that hasn't been done. And here we are in August, and the election is taking place 2 months from now. It's a done deal.
And in other developments now, the National Flood Early Warning System Center of Nigeria's Ministry of Environment forecast heavy rainfall over a 5-day period that may trigger flooding across 19 states. Lagos State is among the listed flood-prone areas. Now, the state government has issued a fresh warning to residents in parts of Lekki, Ikorodu, and Ajegunle areas to relocate to higher grounds. Nimo Basi, Executive Director at Health of Mother Earth Foundation, joins me now for more on this and Nigeria's climate response strategy.
It's good that we do have the warnings coming out, but the challenge is, what do we do about the warning? And going back in history, we've had a series of very disastrous flooding over the past years. I remember the flooding of 2012 was claimed to be one of the worst floodings in Africa. Over 1,000 people lost their lives. And then 2018, we had another massive flooding. 2022 that you mentioned, that flood was attributed to the release of water from Lagdo Dam from northern Cameroon. And of course, the one of 2024, which is very recent, was the busting of the Alau Dam in Borno State, which displaced over 1 million people, submerged half of Maiduguri, and of course, destroyed so many things. So we're having this series of floodings. The Mokwa flooding of 2025, which resulted in the death of 150 people, is very fresh in memory. But the markings, the impacts of the flooding over the years can still be seen in the areas that have been so affected. Highways that were broken in the past floods, some of them are still not being fixed, especially in the Niger Delta. And so again, we have a warning come about the flooding. Responses, we are hearing about responses, but the real response of taking care of the victims, of those who are in this area that are always flooded, we don't really see very definitive work being done in that wise. Asking people in Lekki to move to higher grounds, that sounds good. Lekki, Lagos, that sounds quite good, but almost the whole of Lagos is very low lying. The entire coastline of Nigeria is very low lying. In some places like Ayetoro in Ondo State, almost half of that community is already washed into the sea from flooding and sea level rise and natural subsidence of the coastal area. So the latest warning is something that we're happy to hear, but now we need to see what are the actions, what are the causes. Many of our cities don't have drainage plans. They don't have drainage master plans. And in fact, the way we've been experiencing the flooding in Nigeria, there's currently warning about flooding in 19 states up to 36. Some of past floods have affected almost all the states, which is very alarming. So we need to have an integrated plan, not a plan for one state, leaving the others, because they're all interconnected, especially these southern states like Lagos, like ones in the Niger Delta. Whatever you don't do in Kogi State, in other states upland, is going to be a disastrous contribution to hazards of flooding in the low-lying areas of the coastal belt.
And would you say the interventions we've also gotten from the National Executive Council is a little late? Talking about NEMA receiving about $10 billion from the National Executive Council to strengthen flood preparedness and also its response efforts. Just last week, Thursday, and then we also seen the disbursement of about 3 billion naira each. Just disbursing these monies is not the bigger deal here. Isn't that, is that also, do you align with this thought?
Well, yes. I believe that you cannot just throw money at the flooding problems. There has to be a plan about how it's going to be used, and there has to be a real plan that actually looks at, as I said, looks at the problem in an integrated manner. Nigeria has had ecological fund for some years now, but that has become largely a political fund. There's no accountability about how those funds are being used. And now giving each state 3 billion naira, which is approximately $2 million. I mean, 3 billion sounds like a very huge sum of money, but that's just $2 million to tackle flooding. If we don't have an integrated national plan, and then the sub-nationals have action plans on how to do their bit to contribute to a national protection of the national landscape, then we're going to end up just throwing money at the problem without any serious outcome.
And that's all we can take on this episode of Africa Business Weekly. You can catch all these stories and more on our website, and that's at cnbcafrica.com. Thank you for joining us today. Until next time, stay informed and stay ahead with Africa Business Weekly. I'm Akin Obakeye. We'll see you again same time next week. Bye for now.